welcome. Thank you for being here. I'm Spencer Rascoff. I run 75 and Sunny Ventures based here in LA. I apologize, today is not 75 and Sunny, but my venture firm is a startup incubator, and it also invests in a lot of companies, including Colin's company, Varo Bank, where I'm very proud to be on the board. So Colin, before we jump into Varo, why don't you give the audience here a little background on your banking career prior to starting Varo?
Absolutely. So I have kind of a non-conventional entrepreneurial story. So prior to starting Varo, I ran the European business for American Express, and I was at Lloyd's Banking Group during the last financial dislocation, running most of the retail businesses and dealing with some complex regulatory issues. And then prior to that, I spent time at Wells Fargo. So I came out of more of a practitioner background, and for me, the inspiration for Varo was very much born in the belief that the system is really broken, especially for a mass market consumer that's trying to get ahead in their lives. And we'll talk more about that, but the system is really not working for this massive TAM of consumers around the world, but in the US in particular.
I have to ask, so you're a startup founder that started a company in your 40s?
I'm not going to tell
I'm
you.
guessing maybe
yeah.
some 40s.
No, I was in my 40s.
After a lot of experience in banking, which is amazing. And I teach an entrepreneurship class at Harvard with 100 undergrads, and they all want to do a startup. And the biggest thing I try to convince them of is not to do it straight out of college, because they don't know anything yet. Yeah. And they would actually benefit from a lot of industry experience, which you went and got for 20-something years before starting Varo. Tell us about the founding story of Varo. What were you trying to accomplish when you started the company, and how did your experience leading up to that with all your banking experience help create that?
Yeah, absolutely. Well, so as I mentioned, there is a real kind of impact angle at Varo. So, for me, having had a career in industry for a long time, it was about sort of stepping out of that and saying, what are the things we could do to make a difference in the world, to make a difference for the lives of many millions of consumers, and at the same time recognizing that there was a massive generational shift that was happening with millennials. I mean, now millennials are in their 40s, and you've got Gen Z coming into their prime. And so it just seemed like this was going to be the future, and that you could use technology in ways to build a product offering that could actually meaningfully move the trajectory of the lives of consumers. And so that was really the sort of founding thesis. I think the other piece of it was that from the start, I very much believed that to succeed and build a fulsome product offering and to fully leverage and monetize the opportunity, you had to be inside the regulated system. You had to actually become a chartered bank. Now, many investors, maybe some in the room at the time when I was out pitching this, didn't believe that. They said, oh, you can work with a sponsor bank, you should just build a point solution. And
so let me just interrupt you, sorry, to make sure that I understand, that we all understand. So you're a digital bank, a challenger bank, sometimes people call it, but unlike some of your competitors, you're an actual legal bank.
We are an OCC national bank. We're a member of the FDIC. We're a direct member of the Federal Reserve.
And that's a feature, not a bug, in your opinion?
That is a feature. It's a very complex feature, too.
Okay, so let's stay on that for a second. So first of all, let's talk about the cons of that before we get to the pros. So how long did that take? How much, if you want to share, did it cost? Like, what are the negatives of getting a bank charter?
Yeah, it was a massive lift. I mean, we were 3.5 years in the works. We had to get approval from all three agencies, so the OCC, the FDIC, the Fed. It cost us probably all in, if you think about building a redundant tech stack, building the staffing that you need to run a national bank, so on and so forth, all the legal costs. It was probably upwards of $100 million to sort of make exactly. And so we had large, patient investors that believed the long term.
Warburg Pincus and TPG are two of your
kind of two
investors.
Anchor investors at the time. Yeah.
And now the tax, if you will, continues to some extent because regulators also have to approve certain things the company does?
That's right, and you have probably an element of fixed cost embedded in your business that you might not otherwise. Like, we have to have 3 lines of defense in terms of first line, second line risk management, third line audit. So those are resources that we have to have in order to have an effective risk management system. But maybe, Spencer, let me skip ahead here a little bit and just talk a little bit about, this is a little bit of the why it was worth all of that. Do you want me to?
Yeah, please, yes.
I think I touched on, this expanded product breadth and being able to offer all the kind of core needs that these customers are solving, and I'll talk a little bit more about that when we talk about the product, but you have folks that need to move money instantly. They need to build credit, access credit, be able to build savings habits, manage their money and their budgets. And so all of this, by having the bank charter, there's really no limitation in terms of what we can do from a product perspective versus with sponsor banks that have more narrow permissions in terms of what they can let their programs do. We're also able to move very quickly. We could talk more about that, but now that we're operating as our own bank and we have sort of a vertical integration, we obviously have to go through our own internal compliance processes, so on and so forth, but it's a much faster speed to market. And through this last couple of years, as we've gone through a cycle here, we've been able to really lean into advantages of monetizing deposits, being able to innovate on the payment rails, being able to expand our lending business, and we capture the full economics. We're not sharing our interchange with a third party. And so that's had a material impact on our unit economics over the last couple of years in particular.
So this bank charter is a key differentiator relative to other digital challenger banks like a Chime or an Aspiration or a Dave, and you don't have to mention competitors by name.
Yeah, I'll let you do that. Yeah.
But those are basically sort of a brand on top of a B2B.
That's right. That's
data
right.
provider of banking services to them.
Yeah, and there's a slide here that just sort of highlights, since we got the charter, just all the different things that we've been able to do from a product perspective and the things that are about to launch very shortly. That, again, just the speed at which we're able to innovate and the amount of things that we can do that are still within the purview of our charter. And we're going to keep going beyond this list as we continue to execute against our roadmap.
So I guess last question on the bank charter. If, on a scale of 1 to 10, where 10 is you have taken full advantage of the abilities of having the charter, and 1 is, you haven't yet, sort of where are you today in the first quarter of 2024?
I would say we're like at a 4. Okay. I mean, there's just so much more that we're going to be able to do now with that charter, and as we're scaling, this year we're aiming to turn positive cash flow, so we'll be generating our own capital, and that's going to give us an opportunity to do much more with the balance sheet, because as we're kind of still cash burning, we don't want to be aggressively raising deposits because there's a capital consideration with that. But once we're generating our own capital, there's so much more we're going to be able to do, and as far as deposit gathering products, and then more things we can do on the lending side of the balance sheet as well.
Just give folks a sense of scale of the company. How much have you raised? How many customers do you have? What are some other company vitals?
Yeah, sure. So we've raised about $1 billion since starting the company.
Of equity?
Of equity, yeah, of equity. We have acquired probably close to 6 million core DDA customers, and we've cross-sold probably another 3-4 million products on top of that, where we've already acquired, sunk the cost of acquisition. And the company, like I mentioned, it's got very favorable unit economics. We're covering all of our variable costs, including people, vendors, fraud. We're covering all of our marketing expense, and we're really now just driving towards covering the tail of our fixed cost. And so we expect that to happen later this year.
And we mentioned TPG and Varo Bank are 2 of the main investors.
Primary investors, yeah.
When was the last round, or when?
Big round was in 2021, and then Lone Pine led that. BlackRock came in. We've had Harbor Vest on our cap table, Gallatin on our cap table. You're on our cap table. So, and then we did sort of a small inside round last year. So that's kind of latest from a capital raising.
So we covered differentiation versus other digital neobanks, and the charter is obviously the thing that enables that differentiation. Go back to why Varo needs to exist. Why doesn't B of A and Chase, why don't they work for this customer segment?
For many of the incumbents, there's a couple of things. I mean, one, the economics don't really work with their kind of business model. So many of them have invested heavily in branches. They're on old legacy technology. They're of a certain, certainly the big players are of a certain scale, that they have limitations in terms of their monetization capability, and so particularly around debit card interchange. And so the economics are really tough. These are customers that transact a lot. They contact you a lot. So unless you have very sophisticated call center capabilities. We use an AI bot that handles about 52% of all of our contacts, and we have a material cost advantage given the technology stack that we have. So there's this massive group of customers though. So if you look at the paycheck to paycheck consumer in America, sadly, it's huge. There's about 180 million people in our country that are just kind of trying to get to that next paycheck. We would estimate about 50% of that TAM would be our SAM, our serviceable market, of people that are digitally adopting. So there's about 90 million folks there.
Are those folks currently banking unprofitably with a major,
Yes.
or they're not banked?
No, I'd say no. Most of them are banked. Yeah, the majority of these folks are banked, but they're sticking with the incumbents. So about 85% of that TAM and that SAM are still with the incumbent players because no one has really built out a fulsome enough proposition to get them to switch. And I think this is where Varo, through the innovation and the consistent focus around who this customer is, what are their jobs to be done, how do we build a superior value proposition, is really probably going to be the one that ignites the tipping point here in the US.
But does that customer really appreciate or need the branch because they're going in there for that level of human service? I know it's unprofitable for the incumbent to service them,
Sure.
but Varo's branchless, so.
That's right. So I don't think the branch is a major impediment. For some, probably the difference between that 180 and the 90, it is.
Okay.
So, but of that 90 million, I would say they are comfortable with digital-only solutions. They just haven't found anything yet that is going to fully meet their needs. But now, if you look at the neobank, challenger bank, whatever you want to call it, digital banking model, it is working around the world. So if those of you who've seen Nubank's results last week, they generated over $1 billion.
Nubank is a public company in Brazil with a, what market cap?
It's 45 billion or something at this point. I mean, they're just killing it, okay? You've got the Monzo round that just happened this week in the UK. You've got Revolut that's generating over $1 billion of revenue now. And so these businesses are working. I would say in the US, they're still an undeclared winner. So it's selfish of me to say that, but I feel like there's definitely an opportunity for a company like Varo that has the full stack.
But are they, I mean, to think that Brazil has a $40 billion market cap company that's doing similar stuff to what Varo is doing, and obviously the US is a lot bigger than Brazil, what am I missing? Is it that the incumbents in the US are going to fight tooth and nail and they're better competitors than the legacy incumbent in Brazil, or?
It's a supply thing. So there's a lot of supply in the US. So whether it's at the local level, the regional level, the national level.
Supply of competitive banking products.
There's just so much out there, and there's so many competitors. Even though they're on old legacy technology, they've got fees and charging structures that are actually sort of very punitive. In some ways, they're profiteering off of customers' hardship. But customers have stuck because they haven't had that full suite of solutions that meet their needs. And so I think that, and this is also where being a bank, not only from a product perspective, but also there's a level of legitimacy and credibility that comes alongside. So there's the trust issue as well, being able to earn customers' trust because this is their paycheck.
So I'm guessing, are there any, other than me, are there any Varo customers in the audience? I'm guessing perhaps not, probably not. This is not. This is not your demo.
It's not our demographic.
Right.
That's right. But it's growing, so maybe some of you might end up in the
maybe your kids. What is a retail, just from a brand standpoint? Is this Costco? Is this Target? Is this Walmart? Like, what's Varo's brand positioning?
That's a great question. I would say, I'd like to see us as a little more having the tech savvy of an Apple, but sort of the consumer appeal of like a Target, like a little more of that cachet mass market. So Target may not be a good example this week given their recent earnings.
So let's talk customer acquisition. I mean, it sounds like you've got the charter, you've got a great product offering. And the segment, the customer segment is obviously huge. So how do you acquire customers? Tell us more about your CAC.
So I mean, again, there's this headline says, we've been optimizing around building this integrated platform that serves this everyday American. And so to go to market, it really starts with that core banking relationship. But customers do come to us for different reasons. So the banking intent customer is the most profitable customer, lowest CAC, highest conversion rate to primary banking relationship. But they also come to us because we've got a high APY, we've got a great savings product. They come to us because we have lending products to either help them build credit or access credit. They come to us because they have a peer-to-peer intent, because we've got instant payment options. So there's a variety of reasons. And so how we acquire customers, our largest channel right now is organic. So
Okay,
organic
so product-driven customer acquisition.
100%.
And dev team in San Francisco.
San Francisco and sort of some remote, some Salt Lake City. And so it's product-led marketing that happens through our web and our SEO type activities. We have paid marketing, which we've ebbed and flowed on that because it became very inefficient at one point when there were a lot of competitors running into the space. We dialed a lot of that back. Then we built algorithms to help train the ad networks, Facebook and Google, to find us the best customers. And so that's helped drive efficiency and more scale around paid. We have a very robust referral channel, so customers who are incented to refer other customers. We have a series of partners that bring us customers. And now we've introduced product that has real network effects, which is our Varo to anyone. So you could send money to anyone with a US debit card, and when they receive it, they learn about Varo and they're incentivized to join the platform. And so we're seeing that scaling up nicely as another channel of acquisition as well. So,
by the way, that raises a question. Is Venmo a competitor, or how do you think about Venmo?
Well, Venmo is more of a narrow proposition, but as we continue to innovate in that space, I think we're going to bump into customers having to choose more between, do they use Cash App and Venmo or do they use Varo? And we're already starting to see displacement of some of that activity on our own rails. So that was part of why we launched Varo to anyone, because we were seeing almost 3 million transactions a month on Cash App alone and saying, well, why? This is a less secure platform. They're charging fees a lot of times for these customers. Let's give them a free option and also open up these network effects because we can introduce Varo to all the customers that they're sending money to. So that's actually proven to be a real winner for us.
Is sort of in the stock trading space, should I think of like Robinhood is to Schwab and Fidelity as Varo is to B of A and Chase?
Absolutely.
Okay.
Absolutely.
Let's talk progress. So you started when did the company start?
So I started the company in late 2015. Warburg invested Q1 2016. We put our first product in market Q2 of 2017. We've been iterating around that for obviously now a number of years. So 6 years of just kind of deepening our insight in terms of what customers want. We were doing this initially through the Bancorp banks. We had a partner bank. We got the bank charter in 2020. So we had to build the whole banking stack. We converted all of those customers across. We unwound those prior relationships. And so since 2020, the company was growing very rapidly. Then 2022 hit. We scaled back, said, you know what, this grow at all cost model is not the most prudent. So we really started to focus on product-led marketing growth, driving better unit economics. I mean, I can share that. Our contribution margin for our active customers is north of $100 right now. So every customer is accretive. Our best customers, which we call our North Star customers, is above $250. So all these customers are adding real value to the platform. This is why profitability is very much in sight for us. And so now it's about continuing to build out this sort of integrated financial platform. We like to call it internally a financial operating system for the customer's everyday life. So whether it's about payments, whether it's about budgeting, whether it's about credit, savings, eventually we'll get into investing and credit cards, that everything sort of plugs into this operating system in a very seamless, easy to use app experience. And so we're just going to keep building that out, drive profitability, ultimately become a public market company and become that Robinhood to TD, Ameritrade, or Schwab.
Can this customer be served profitably? I mean, they're like, how much do they have in?
We're doing it. I mean, we're doing it right now. And again, it's because we have a number of ways to monetize. So we've got debit interchange, credit interchange, lending revenues. We've got fee-based revenues through a variety of services that we provide. So it's quite a diversified.
And several of those ways to serve this customer profitably are only available through the charter.
Because we have the charter. We can monetize deposits. I mean, we're earning 540 basis points on the deposits that are sitting at the Fed right now. A neobank that's with a bank partner would never have access to that kind of monetization.
Okay. And so, you talked about an IPO path, and Actually, is the CFO publicly known? Or not
It
yet?
will be next week, but we can pre-announce. So yes, you're.
Well, there'll be I won't announce. All right, it's up to you. But
That's
anyway.
fine. Spencer's former CFO from Zillow is now my CFO. So
there's a public company ready CFO in place that used to work for me at Zillow when I was CEO there.
Yeah.
And you're obviously a public company executive. So it sounds like potentially one more round maybe
probably just to
that.
put a little fuel in the tank if we want to really scale up the balance sheet a little bit more. So
I think being public also would probably lower your CAC. I mean, it would raise awareness, but also people would feel more secure about their bank if they were publicly traded as well.
I mean, our CAC is the lowest it's ever been, but you're right. I mean, it gives you some of that additional awareness boost.
By the way, I have lots more questions, but if there are any questions, feel free to raise your hand. Happy to turn it over to you.
I have another slide on the product. I know we talked a little bit about this, but
I mean, the product is beautiful, and I know you haven't experienced it, so why don't you leave this up for a second. Let's talk about the path ahead. So 3 to 5 years from now, it sounds like Varo will be public, hopefully long before 5 years from now, but what else should people expect is on the roadmap for the company?
Yeah, well, I think if you step back and just look at some of the points that I made at the beginning, like what is the future going to look like? I mean, technology is evolving at an incredibly rapid clip. I mean, if you're sat through any of these sessions and you're hearing about the evolution of AI, and we're embedding AI solutions into our credit underwriting, into our fraud detection tools, into our personalization tools, like it's really finding its way into almost every aspect of our business. And some of these incumbent banks, particularly the small kind of unit banks that are operating in communities, or even the regional banks, they just don't have the budgets or the ability to attract the talent. So if you look at a macro level, this is the future of banking. Then you join that up with the fact that there's like this massive generational shift underway between people that grew up with a phone in their hand. They were born with a phone in their hand practically. And so they're not going to go drive to a branch and sit in an office.
Well, and obviously, B of A and Chase and others have 100% brand awareness, but they don't have 100%. They don't have very strong brand affinity.
Well, they don't have our NPS score is over 80 for our North Star customers. I mean, like, what bank in the world can claim that?
Right. And App Store rating.
I have 4.9 in the Apple App Store.
Okay. So, you mentioned that you pulled back on paid marketing when we moved out of ZIRP and money was no longer free. So, any startup founder has this growth versus profitability trade-off that they have to manage through. Just, can you talk about where you are in that?
Yeah, sure.
How you think about that?
Well, I mean, it was kind of one of these, oh God, moments where like we suddenly pulled back and our acquisition went down, 2/3, and I was thinking like, oh, now we got to figure this out. And how do you sort of ramp that back up in a much more efficient way? And that's where we got very clever around how to build, the algorithms for paid, how to build network effects, how to really repurpose our whole organic strategy so that we could be bringing customers in. But so that was a kind of a scary thing. But now this last 6 to 7 months, we've doubled our monthly acquisition at almost 70% less CAC. I mean, so you talk about this, and we crossed the line in terms of positive contribution margin about 18 months ago, I want to say now, and that, again, and that's just been steady up and to the right. And so the business, we brought our burn rate down massively, and like I said, we're now just kind of running through that last tail of under the curve of our fixed costs.
So last question, Colin. You decided to jump from banking into startups in your 40s and start this company. I mean, you'd probably be CEO of American Express or CEO of Wells Fargo by now if you had just stayed there and kept your head down.
This is far more rewarding.
Okay, well that was good. That was the question. So why?
Yeah, I mean, I'm loving it. I mean, it's an adrenaline rush. Every day there's another existential crisis that you have to deal with as a founder and a CEO. But I'm dealing with regulators, I'm dealing with investors, with a board that gets involved in a lot of stuff. I've got an incredible management team, which I'm very proud of the executives that are part of this. And we're delivering something that's making a difference in the world. And at the end of the day, that's the biggest reward. Is that when I read those comments from customers, when I see those app reviews, when I listen into customer calls, and I'm hearing how this is changing their lives, like that is why I do this, and that's why my team does it. And so I feel like we have a real shot. As I said, there's still an undeclared winner in the US. We're gunning for that position. I think we can change this industry, and I think we can become the new benchmark around what banking and how to improve people's lives.
Well, when I invest in startups, one thing, perhaps the most important thing I look for is founder product fit. So does the founder have a strong connection to the problem that they're trying to solve? And clearly you certainly do. You care about this customer segment and you bring extraordinary experience from your prior life into creating solutions for that customer segment. So Colin, thanks very much. Thanks to everyone for being here.
Thank you.
Thank you.
Yeah.